A weaker dollar tends to mechanically put upwards pressure on Bitcoin, given that Bitcoin is priced in dollar terms across most global exchanges. When the dollar declines, Bitcoin essentially becomes less expensive for the rest of the world to buy, which increases the demand from foreign investors. And the opposite also holds true. Historically, moves down in the dollar have coincided with rallies on Bitcoin. And dollar strength has typically led to sharp corrections on Bitcoin. So far in 2025, the US dollar is down around 12%, putting this year on track to be one of the worst for the dollar since the 1970s. This chart shows us Bitcoin's performance in relation to different degrees of dollar weakness. The data is broken into 5 groups, based on how the US dollar performs over a 6-month period. When we look at Bitcoin's returns, we see that when the dollar was at its weakest, so right here, Bitcoin returned 190%. Even when the dollar was moderately weak, we saw Bitcoin deliver around a 40% return. So if the dollar continues to weaken from here, then based on this data, Bitcoin could rise another 40% to 190%, which would put it somewhere between $150,000 and $210,000 per coin. And we do have evidence suggesting that the dollar is likely to weaken further from here. This is where the second development comes in, which has to do with interest rates. Throughout 2022 and part of 2023, the Fed had been aggressively hiking interest rates to bring inflation under control. But since late 2023, the Fed has kept rates stable and eventually even began cutting them from September 2024 onwards. If we zoom out and put the US dollar index on top, we see that, while not perfect, the two lines have a close relationship. When the Fed hikes rates, it typically results in the dollar strengthening. On the flip side, when they lower rates, it coincides with the dollar weakening. And that makes sense. When the Fed cuts rates, it lowers the return investors earn on dollar-denominated assets like treasuries. And with less incentive to hold dollars, demand falls, causing the US dollar to weaken. Just last month, the Fed cut rates by another 25 basis points and is projected to continue doing so for the rest of 2025. This should put further downward pressure on the US dollar, which would be quite constructive for Bitcoin,